Welcome to Crypto Trading Empire. I'm Lex, and before we get into the video, I would like you to like this video and subscribe to my YouTube channel. So, before further ado, in this video I'll be talking about a 5-minute trading strategy in BTC, in Bitcoin. And this strategy is a very simple strategy that I've been using. So, this strategy is very simple. Once you see the 50 EMA, and we just say this is the 50 EMA, and you see price trend above the 15 EMA, do a pullback and create a higher high that is higher than the previous high. All we wait for price to come back to this resistance that was broken. We wait for price to come to that resistance that have turned support now. When price pulls back to the support, we buy for an uptrend. For a downtrend, let's just say this is our 50 EMA. So this is our 50 EMA for a downtrend. We wait for price to trend below the 50 EMA, pull back and create a low that is lower than the previous low. Then we wait for price to come back to the previous support that was broken to become resistance now, which is known as support to resistance. So when price pulls back, we sell to the downside. So next we'll go to the chart and I will show you an example in the chart. So the first we'll talk about is an uptrend. So as you can see here, you see price traded above the 50 EMA. This is the blue line, is the 50 EMA. Price traded above the 50 EMA, pulled back, and created a high that is higher than the previous high. So remember what I said? I said I will wait for price to pull back to the previous resistance. For an uptrend, we wait for price to pull back to the previous resistance that was broken. Then we'll buy to the upside if we identify any buying pressure, which you can see here. This green candle is the buying pressure, which indicates that we need to buy. So which you buy at this point. So for stops and targets, to set your stop, you just set your stop below your area, the area that you point out. You set your stop below the area. And target, you can use a fixed target. It's either you use structure or you use a fixed target of a 2-to-1. That means you're risking 1 to gain 2, which is 1-to-2 ratio. So this is for an uptrend. You wait after price breaks structure, you wait for price to pull back to the previous resistance that price broke. Then you, after identifying the buying pressure, which is a green candle, then you buy to the upside. Next, I'll be showing you an example on the sell side. Bearish trend. As you can see, this is a fresh break of the 50 EMA. Price pulled back and created a lower low that is lower than the previous low. So as I said, you wait for a bearish trend. The support that was broken, you wait for the support to become resistance. So you mark out your area. And as price came back to the area, you saw a selling pressure, which is a red candle. You saw a selling pressure. You set your stops a little bit lower from your area. Then you use a fixed reward to risk. You can either put it at the structure, which you say if you have used the structure at this area, you should have gotten a 1-to-4 reward to risk ratio. But if you think of using a fixed target to 1-to-5, it depends on your fixed target that you are using. So this strategy is just a day trade strategy that I use. So before closing up this video, like this video and subscribe for more videos and turn the notification bell so that you get alerted when I drop the new strategy on day trading, swing trading, and even position holding. So see you in the next video.